following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow Industrials down 179, Nasdaq's up 46, S&Ps are down 21, gold contract down $26.80 at $1,050 an ounce, silver down 56 cents at $13.68 an ounce, platinum down 30 bucks, $8.43 an ounce, copper down 2.5 pennies at $2.04 a pound, light sweet crude down 60 cents, $34.92 a barrel, bonds 10-year up 13 ticks, 126.05. 30-year up a point and 11 ticks, 155.28. King dollar up 1,400 ticks, 99.29. The euro down 106 at 108, and the yen is trading at 122.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Deviant market, baby. It's pretty amazing, actually. So this morning, folks, you had Europe up 2 to 3%. We're talking about 200-300 points. Our S&Ps, bottom line, we're only up 4.5 points. This is pre-open. And, you know, it was like, man, this is very unusual when you can have the European markets up so dramatically, and they were up yesterday, and bottom line, we didn't have any juice. Well, bottom line, you can see what's going on. What you have out here is a lower high again. We already have lower lows. Bottom line, market couldn't handle higher price right off the bat. There's sellers out here, and they're big. So thus far, we've given back exactly what we had yesterday. What this sets up, you know, the good old 3 black crows are still hanging out here. Never even got to that swing point. Never mind that swing point. It didn't get to the last swing high, which was 211. You know, we hit today 208.48. The last swing high up here was the December 2nd swing high. That's 211. The prior one to that is 211.50. The prior one of that is 213.08. Bottom line, it's real subtle and it's real deviant. There's no two ways about that. Bottom line, though, you have sellers out here big time, too. NDX 100, same setup in the NDX 100. Couldn't handle higher price, couldn't handle highs, all of the above. You're coming off those highs and you're coming off those highs with some juice. The NDX right now is trading down 40 bucks. What I expect you're going to see, it's been teetering down here all day long. And how we come into this close is going to be a big number today. You know, because what we've done is this. We're right back where the 2 o'clock announcement came yesterday. That's where we are in these indices right now. So it hasn't broke below that area yet. It didn't take no time to get down there. You know, when we take a look at the market opening, we were down into this area within the first hour and a half of trading out here today. The real key is going to be, do you break down this area and get into lower lows? Gold contract, they certainly whacked the gold contract. Gold. So this is what we have with gold. GCG. Gold's trading out right now. Let's see this. Okay, we're at 1,050. We came down today with 161,000 contracts, which is big, which is definitely an expansion of volume. That being said, you're going into the swing low of 1,045, which was established on December 3rd. That level there, we had 174,000 contracts. Then we went topside with 209,000. What I expect we're going to see out here, especially coming into a Friday, this thing's going to test the 1045 level. Today we tested the 1046. It rejected it. Bottom line, I expect you're going to get that test. Now, if we go look at the GLD, which trades at 10% of the price of gold, what you have is that the GLD has done 8.5 million shares. You're coming into 10.2. Thus far, it's right at the swing low. It's been fluctuating back and forth whether it wants to reject this baby or not. Bottom line, the swing low we're talking about is 1053. Right now, 100.53. We're trading with 100.55. Bonds. We go take a look at the bond market. Now, this is where even this morning, the bonds were signaling once again that the markets wanted to go south. This is pretty amazing. It's really amazing in the context that we know that the Fed has gone up yet. Now, it's not a speculation. The Fed went up. The Fed says they're going to go up. They expect that the short-term rate will be 1.375% at the end of 2016. That would be 4 additional rate cuts of 1/4 point apiece, or whatever way you want to basically say that. That being said, it didn't stop the 10-year from going higher. The 10-year right now is up 13 ticks. We're at 126.05. And bottom line is that, you have a high volume swing point at 127.10. Looks like it wants to go for, we'll see whether it wants to get up to the highs. The 30-year has even more juice. US U6. So 30-year out here today. 30-year is trading at up a full point and 12 ticks. We've done 209,000 contracts. Now, the 30 is a trip, man. So the high in the 30-year, folks, is at 158.28. We're right next to the high. So 32 ticks in a point. We're close to 156. So you're talking about you're 3 points away from the high in the bond market. And, the way bonds are trading right now, I suspect the high volume swing point from 157.17, which was December 11th, that wants to get tested. You take that out with volume, and guess what? You're going topside in spades. Now, King Dollar. Let's go over to King Dollar, because here's the disconnect also. King Dollar, well, this is not a disconnect in the aspect fundamentally. So fundamentally, you up in interest rates, makes sense the dollar goes up. What doesn't make sense, and this is what's pretty cool, is that we're up on 28,000 contracts. So it has the price spread. It doesn't have the volume. That baby is going into 125,000 contracts. That being said, what I expect, I expect that tomorrow you'll probably make this run. We're at 99.28. You'll probably make the run to the 100.37. And between that, the metals market, the S&P, now let's go into the oil market. And what I expect, this volatility is going to not only continue, folks, more than likely we're going to see it actually get higher, because the oil market is sitting right at its lows and looks like it wants to jump the creek. The oil market jumps the creek tomorrow morning, down a couple dollars. You can expect very fast, lower prices. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 176. Nasdaq's down 48. S&Ps are off 22. And I just missed Vince from New Jersey. His speech therapist was coming. So, as you're giving Vince some nice speech therapy, make sure you keep that Boston accent in there. He's doing real good with that Boston accent. Now, let's go out over to my man, Carlos in California. Carlos, what's happening, brother?
Hey, Tom. Good evening. Nice to talk to you again.
And it's great to talk to you, man.
Well, Tom, I have a question for you.
Yes.
It's related to the VIX.
Okay.
And my question is, we had on Monday, I think it was Monday night, let's say Monday night, I made a day high of 43.09. A high. I don't know if it's a
23, I think, right? Is that?
Actually, it's 26. But
okay, yeah, no, okay, right. I said 40. Okay, yeah. So, yeah, 26.81. Yes.
This morning made a 16.13.
Yes.
And I noticed yesterday the move to the downside, to the upside was stronger than the move today. I don't know if you can correct me on that.
No, that's correct. That's correct.
Moved about the same level yesterday. Actually, right now it's trading right around that level.
Yes.
Give or take. Can you help me with that? Because I think the volatility is starting today. I don't know if
so. Right. What happens is this: is that as the inside the market in general, right? The fear is always larger than the greed. So when the fear actually comes in the marketplace, the VIX explodes topside. Now, what you have out here, which is just amazing, is that they bought the market yesterday. At the beginning of the market day out here until, even till about, I don't know, probably a good hour and a half ago, there was no fear even in the market when it was down this low. The first 150 points, there wasn't really any fear in the marketplace. It only just started moving into the marketplace the last 90 minutes. Now, what will happen, is that you will see the VIX probably climb as we get into the close out here. The VIX absolutely, what the VIX has to do with, it has to do with the amount of premium in the first and second months of expiration for the closest strike points. You know, so it's how much will someone sell risk for?
Okay. Now, for the season we're going through, which is the end of the year,
Yeah.
normally we can say that volatility kind of dry. And will that be a case this year, do you think?
No, I don't believe that at all. Once you get, to me, once you get in volatility, which we've been in volatility now since August 24th, you know, it lasts 5-6 months. You know, if you look at the market, you know, okay, so watch when you look at the market here. And this is, you want to wrap your head around this, folks, okay? The market is so subtle that, yeah, it's been at highs for a long time, but the downdrafts have been dramatic, man. You know, we went from 210 and the S&P down to 182 in 5 days. Then it took, you know, about 3 weeks to get half of that back. And then it took 5 days, it took 8 days to go back down to 186. Then it has taken us, well, it took, let's see, what, 2 months to get back up to the highs. You know, this is a highly volatile market, you know, so yeah. I understand the concept that it would make sense that you're coming into the end of the year and it should die down, but I want everyone to put yourself in a money management role. If you're in a money management role right now, the bulk of money managers, financial advisors, all of the above are not in a winning position. They're, in fact, in a losing position. The S&P, you know, if we go back to January 1st, so let's just put the cash S&P up, and I'll show you what you're looking at here. And this is you want to wrap your head around this, because this is how money managers have to think if they want to basically have any money or have a job. So we're at, there's January right there. Okay, so we're at 2053. The beginning of this year, we were at 2046 to 2093. So let's just say it's a flat market for the year, okay? Okay. That being said, there are, well, as of last week, there was 70% of the stocks in the S&P 500 were under their 200-day moving averages. So what that means is that if your money manager had, you know, the stocks that are up, God bless him or her, okay? Then you're going to make money. That's only like 5 or 6 stocks in the whole marketplace. So that being said, after 5 years of being up, and this is where it comes down with the volatility or not, they're going to make a choice and say, okay, hold it. Do I want to basically stay flat? Because they still have to get their 2% management fee out of that. And so they when you take that into consideration and you take the fees, most accounts are going to be down for the year. So they're going to make a choice and say, okay, hold it. Should I get out and be flat? Because what if we do go down another 5%? You know, so my take on this is that we're going to continue to see selling. And the markets themselves, you know, it's here. I mean, you know, the public companies themselves have been playing legally with their books for a long period of time, meaning what the earnings are, what the PEs are. The PEs, folks, are much higher than, the PEs are averaging out like 18, 19 right now. That's high as it is, but you know what, those, you're taking that into consideration if you're a fundamentalist with an accounting that is a non-GAAP counting, meaning that they turn around and say, okay, hold it. I have this expense and that expense, and we're not going to count it this time. And when I say not count it, folks, that's exactly what it is. So when you're looking at that bottom line, you think they're making money when in fact it'd be like you and I in our household that we say, okay, we have $1,000 to run the house this month, and you know, we're at $900, and all of a sudden our heater breaks, and we got to go pay a heater for $5,000. Well, we pay that $5,000, but then we make like, oh, that doesn't count in our household budget. Well, that's what public companies have done, and that's what non-GAAP earnings are, folks. They can put anything they want in it. So I think we get a volatile market, man. I think it's going to be like highly volatile.
Well, thank you very much, Tom. I'm not going to take more of your time, and I really appreciate it for all of us.
Well, we love you, brother. See that?
Thank you.
See, that's it. And hey, you know, it's a beautiful thing because I mean, bottom line, you get that Boston accent too.
Oh, great. Well, thank you. That's a compliment. Thank you.
Oh, you're too funny, man. Have a great one, man. Have a safe one.
All right.
Okay, so coming into this close, you know, oh, yeah, Apple, by the way, folks, this is just a mind blower too, man. You know, Apple is only down $2, but man, it is amazing what $2 in Apple can do to the indices. It has broken the lowest swing point, broke it with volume. We have on the weeklies it broke it with volume too. We got one more day. We've already done 210 million, and the swing point has 189 million, and the one before that is 216. You know, so Apple wants lower price, which is you know, indication that this market is going to basically continue to sell off. This is Tom O'Brien, it's TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 175. You get the NASDAQ off 47. S&Ps are down 22. We take a look at inside the Dow, what is moving this baby around. So inside the Dow right now, you have 3 equities that are positive. United Health is up 66 cents. Big Mac is up 3 cents. And Nike is up 2 cents. Taken away from it on the way down, Caterpillar is the culprit. That's down $2.47. You get Chevron off 207. Walmart's down $1.18. And Merck is down $1. Inside the NDX 100, what we have is that Win is down 410. That's the laggard. Checkpoint Software is down 387, and Viacom is down 154. Putting juice into it on the top side here is that you have Micron Tech up 30 cents, JD.com is up 34, Henry Schein is up 84, and you got Charter, C.H. Robinson is up 33. The volumes out here, let's see what we have happening. So on the NYSE, you're going to be at 622. That'll probably only come in about 900 million. We take a look at the composite, 1.4. That'll probably come in about 1.9 million. So what you're going to see out here, now this is where this gets really deviant, is that what you actually have there is that you're going to have a higher high, lighter volume, and a give up on price. And that higher high with lighter volume certainly is going into other downdrafts that had dramatically higher volume. So that's some of the, let's go take a look at some of the other Dow stocks. You get Big Blue down 220. 3M is off 52. JP Morgan is off 104. Let's go to JP Morgan because these banks, man, they shouldn't give it up, but they're going to give it up. Unbelievable. So JP Morgan got to a high of 68. It's at 66.50. You've done 12 million shares and 68. Unbelievable, man. Now, this is really bizarre because the banks, folks, okay, no doubt will make more money with rates going higher. They already went up on the prime, a quarter point. So anything that's tied to the prime, they get an extra quarter point immediately. Just bang, found money, okay? And JP Morgan still can't make it over the downdraft that was initiated on August 19th. That's a big number we're going to watch because that is the number, by the way. If we go over to the cash S&P and look at this number, this is your benchmark out here. The benchmark that you're dealing with is 2096. That's the benchmark. It gets over that, then you can get to highs. And that's a long way from where we were. It wasn't a long way from where we were this morning on the open. This morning on the open, we were at 2076. We're only 20 points away from it. Now this type of sell-off, that's a big deal. Now, check this out. If we go over to Europe, you had, just so you can see these indices, and this is where there's a big disconnect. We had the DAX up 2.5% at the close. The CAT was up 1. The FTSE was up 0.6%. Now, what we did get is that you got to sell off in Europe as our markets basically were dragging them down. If we go over to the ExxonMobil sideways move out here today, down 65 cents. Now that's nothing for as to where and how the oil market is trading. So check this out. The oil market today, let me make sure I get the right contract here. 1 second. Oil. Okay, crude oil was down 1.77 today. 100. Yeah, we broke the lows out, and we closed at the lows. Oh, this is heavy, man. Let me see. Okay, so last low. Oh, this is crazy. So check this out. Last low was $36.10. We're at $36.13. And, we'll see whether we're going to break down. But the bottom line is that you're right there. Now, if this ends up being an ABC down, watch how this goes. This is about as intense as you get. The A point on this would be, most conservative, would be 43.37. The B is 36. So you're talking about, what, $6.50, which would get you to 33, 32. Yeah, that's it, man. You know where we're going? Okay, so check it out. We're going to this. The high volume swing low, folks, from 2009 is game. The ABC structure takes you right to it, which is just crazy. 32.40. The continuous that's only $2.40 down from where we are right now. 32.40. Wants to go after 32.40. We'll see what happens when we get down there. Let's go to our man Frank in Gloucester. Hey, Frank, what's going on?
Hey, how you doing, Tom? A little damp up here today.
Oh, that's good.
Yeah.
That's good.
Yeah, that's fine. Hey, I wanted to talk about KRE.
Let's take a look at it. So
I bought a little yesterday during that volume festival.
Yep.
And, it's backing off today on low volume, but it sure looks good. It did a it did an A to B from the August low, and I take the August low from the bottom of August 25th, not the 24th.
Yeah, great move, right?
And that looks like it matches a lot better. And it's done a 618 retracement off that increase.
So let's take a look at it. Now, watch what happens here, folks. This is the regional banking ETF. And, when we're talking banks, the regional banks should actually probably make more money to their bottom line than the larger banks. And the reason I'm saying that, folks, is that the regional banks don't basically play with the regulations as much as the large banks do, and so large banks are always paying so much more in fines. So they're going to make the money. I think the question is with the regional banks, they don't have to pay out as much money in fines because it's not part of their operating procedure as it is with the J.P. Morgans of the world and the larger banking structures.
Right, they don't get fined as much either.
No, they don't, because they're not, they're not. Anyway, it's a different ballgame. Yeah, I like this trade, Frank. I mean, it has a high volume high at 46.33, which was November 6th.
Yeah.
Yesterday, you went up. I mean, you could just put a stop under 41.94. You don't even have to give it the bottom of that, the top of that. It shouldn't even get to it. It's acting pretty good out here today, actually.
Okay.
Yeah.
All right. Hey, that's good. Thank you.
Let me pull this back a little bit more.
All right.
Yeah. I mean, see, this came down. Now, this is intriguing, too, because it came down 28 million shares into 36. Yeah, and it came down to the high of the low of the trading week of August 28th. And
right.
The first time it came down, 28 million shares, 31 million shares, and you're going into 36 million. And I like that. What happens is that you say, thus far, you have a rejection of price. So I'd stay right there, man.
Okay, bud.
Cooking, brother. Have a great one, man. Have a safe one. As we were talking right there, folks, and this is going to get wild coming into this close because the S&Ps, you're talking about a nice little bounce. This is these things. I was just saying to someone in the den, ESH6. It's almost, and this is where this gets really wild. When things happen over and over and over again, folks, we've been trading in these ranges. And, if you're a day trader, what happens is that, you trade the bottom of the range, you trade the top of the range. And when it just came down and rejected it again, I had said to them, it's almost too easy, And when that happens, then something else start working. We'll see, but what I'm talking about is that this is the third time we've been down there, came down, just said, see ya, don't want to be ya, and you get a nice bounce. And when you're talking bounce, you're talking a decent bounce if you're trading intraday. You stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is off 167. You get the NASDAQ off 45. S&Ps are down 21. Now, as you come over to our website at TFNN, folks, this is the last 4 days of our Tiger Dollar sale. The way the Tiger Dollar sale works is that if you are looking for any subscriptions at TFNN, you have any right now, you can get a 25% bonus. Tiger Dollars are good for our product at TFNN, totally transferable. No expiration date. Just to give you an idea how it works, you buy $500 worth of Tiger Dollars, you get $625 to spend. Out of that, this being the Christmas season, holiday season, we're going to donate in your name to the Salvation Army 5% of the cash value, up to $1,000. Over $1,000, we donate 10%. That donation is tax deductible. Salvation Army themselves will send out to you the tax deductible amount that you bought. So the bottom line is that if you do want to get Tiger Dollars, save 25% in the coming year, this is a great time to do it. This promotion, folks, is over on December 21st. It's a hard date, by the way. What a hard date means is that it will be over Monday. And the reason that it is a hard date is that we have to get the names to the Salvation Army. We have to get the bread to the Salvation Army so that you will have this at the first of the year yourself. So check it out on the front page of TFNN. As we come into this close, I expect, you're going to see volatility. The volatility is going to be out there. We go take a look at the ETF structures. What you have in the ETF structures is this. You have got to a higher high. We have lighter volume at the higher high, and it hasn't been able to hold price. We're coming into option expiration tomorrow, and it's quad witching. Okay, so you have 4 different indices that are expiring. And what that means is this. So check this out. This is going to be pretty cool watching this shake out. The S&P options on the cash expire at the open tomorrow. So that is always a wild open, folks, when this goes on. So the print of the open is the expiration. You can expect this volatility not only to continue, you can flip a coin to decide whether you want to be up 20 or down 20 points. So we'll see where that does shake out. I certainly don't expect a flat market, though. The reason I don't expect a flat market is that what you do have out here now is this. You have out here, if we go back and we take a look at this S&P for a second, what you have is that you have given back just about everything after the fact of that 2 o'clock time frame. So what I expect you have out here is that at 2 o'clock in the afternoon yesterday, S&P was trading at 2040, and we're at 2040 right now. It goes topside, and as it went topside, if I was a bull, I could have, hey, that's pretty good. Everything's going to be cool, man. We went up. You're right next to the highs. Yeah, you could go to the highs real easy. So I suspect when that happened, it was an orderly up thrust. There's no doubt, except for the first thrust higher. But the first thrust higher went higher and lower. But after that, guess what? It was an orderly market. So I suspect what you have is you have a lot of buyers that were in there. They're in a bad position right now within only a day. And when you're in a bad position in a day, even if you're a professional, that is a problem. That's a problem for the market. Not a problem, well, it could be a problem for the person or the accounts that are in there also. But it's a problem for the market because what ends up happening is that it's a very fast sell on the other side. If you've ever seen how a professional can sell, a good professional, it'll blow your mind. I mean, I've been beside a couple of them, and it's, I can sell and I can buy, but I'm telling you something. I've seen some people that are so talented, and they're pure machines, like sell 100,000, 100,000, 100,000. I'm talking about 100,000 queues of spies at a time. They don't flinch. They don't flinch, folks, because what happens is this, is that they can't be down. Like when they run big money, you can't be down like 1% or 1.5% a month. Their money disappears like immediately. So I mean, I know the reason, but it's pretty impressive watching it, and they're just as impressive buying it. But selling it is even even heavier. There's no doubt about it. Tom can explain expiration. Okay, also, what are the odds of the SPY falling 3% in one day? No, I don't see the SPY falling 3% tomorrow. Not in one day. I mean, because this has been an orderly market, period. On the way up and on the way down. I'd make the case that the way up, has been slow, steady. The way down, as it normally is in all of these markets, is fast, furious, and all of the above. 3% would be $6. No, I don't see that in one day. What I do see is that there's going to be quite a bit of selling. What blows my mind? On CNBC, they're continually saying that tax selling is over. It's like, tax selling is over. It's the 17th of December. It's not even close, folks, okay? The bottom line is that you can sell right up till the 31st. Why would tax selling be over? That absolutely makes zero sense. Tax selling, to me, is really just getting started. Not me personally. I'm just saying that that's not even close. It's over. Why would it be over? The people haven't taken profits yet. They haven't taken losses yet. There's plenty of them that haven't. And that's just normal. That's not I can't figure out how they figured December. In the middle of December, the tax selling season is over. People go right up into the very end. That's what that goes to. The IWM, let's go take a look at the small caps out here. So the small caps, yep, they gave it up also. Now, the small caps have been in bad shape for a long period of time. It's pretty amazing, actually, looking at it. The high in the small caps is 129, 113. And that is what I get for listening to CNBC. I know. Shame on me. Well, TFNN don't start live to 8 o'clock, so but we gotta start at 7. We're gonna get a few more hosts out here and start them at 7 o'clock in the morning, I think. Maybe 6. Oh, you gotta love it. Oh, that's pretty funny. Well, one of the traders is saying the 30-day wash rule. I can see how that could come into it. But that's if they're buying the same stock. And what has happened now with the ETF structures is that inside the ETF structures, you can actually sell, if you're selling, because that's where the wash rule would come in, you can be selling, an equity and just buying the ETF back and almost have the same position. Not quite, but you'd just be close there. Okay, so now we were talking about, let's go back to this market again, because as we were talking when I came back from the break, how it was almost, and this has been going on for a long period of time, folks, if you're trading intraday. The ranges have been beautiful, okay? They go down, they get range bound, and they stay. And, we'll see if in fact that can stay, because the range bound today, inside the E-minis was beautiful. The low is 40 and the high is 48. Well, you know what? That's 8 points. 8 points is $400 per contract. That's a big number. When, as I said a little bit earlier, it almost seems too easy that gets to the bottom of it and it just basically rejects it and goes higher again. You stay right there, folks. We're going to be coming right back. Dow right now is down 170. Nasdaq off 48. S&P's down 22. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And as we come in, the S&Ps have 21 minutes left to trading in this session. We have all of 6 minutes, before the Dow closes. It's going right after these lows again, just as we're speaking about these lows. Let's see. It's 54. I suspect it looks like it's gonna break it. And one of the tigers in the den was saying that that last bounce actually could have been the bears just covering, making sure that they have their plenty of honey for get a little sleep tonight, get feeling good, and that could have been that bounce right there to 2046. Now we're going to know real quickly if in fact that was just the first cover, because if that was the first cover or the cover in general, that'll bust that coming into the close. And what does happen inside the S&Ps, folks, is that even though they trade to 415, unless things are really bad, the reality is that 4 o'clock, coming into 4 o'clock, that is the hour where the biggest amount of trading will take place. After that, bottom line is that the only time I've seen big numbers after that is that when it's really a bad day on the way down or a great day on the way up. Then yes, then you can have some very fast accelerations on the way down or basically on the way back up. Dow Industrials out here, if we take a look at this Dow, what you have with the Dow, well, it looks like we almost just gave back everything. We started yesterday at the 17,000, let's see, 530. Yeah, there we go. So we just gave back everything. And we're at 17,531. We literally just gave back everything. We take a look at the S&Ps. What we have with the S&Ps is that the S&Ps started yesterday at 2037, and we're 2036.50. So the S&P is also they're pressing on right what we were just talking about. Let's see how they're pressing on this. They're going to break it. Yeah, they're busting it. So this does have enough time, man. This is going to be crazy. We just busted it, and this is when you go to the trading places and. Yeah, you know, Mortimer's turn those machines off, because in the, in 10 minutes we just went down 9 S&P points. You know, from the highs of today to where we are right now, we gave up, let's see, what, 62, 52, 42, oh man, 32, we gave up 37 points. That's a big number. And in fact, what we're doing now is that we're blowing through the lows of yesterday. So now what has happened is that you basically not only gave up what you have yesterday, you gave up more. And what that is, you know, bottom line, we never got to a higher high anyway. We didn't get to a higher high, but what you also got is that you got more folks in the market, because the market looked pretty smooth, no two ways about that, gave it up, coming into option expiration, coming into the end of the year. You know, what you have out in the market right now is that you have multiple higher lows in the marketplace, multiple lower lows in the marketplace. That is basically the definition of a downtrend. Deviant, yeah, there's no doubt about it, folks, okay? This market is deviant beyond belief. You know, there's no doubt. Oil, you know, oil's going to be a problem. Gold, we'll see tomorrow morning, man. I mean, that's going to be it's going to be a tough nut to crack tomorrow. Coming into a Friday, that gold market is going to be a tough one. It held decently today. You know, for what they threw at it, bottom line, you know, held. The GLD is holding by 2 cents. You know, it's literally holding on by its nails. I mean, big time. There's no doubt about that. The equities are not as bad. You know, they're down, but they're not as bad. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow down 222. Nasdaq's off 60. S&Ps are down 28. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials down 253, Nasdaq off 68, S&P's down 34. Markets, folks, gave back everything that it had yesterday. We got to a higher high. We had lighter volume, gave it up in price. Deviant, no doubt. Bottom line, we're going downtown. You get triple witching tomorrow, option expiration. You can expect this volatility to continue in spades. Excuse me, folks. Gold contract down $26.50, 1,050. They slammed the gold market. Dollar went up 1,300 ticks. Gold. Okay. We had expanded volume on the way down. And we're at 1,050. We hit 1,046.50 today. The swing point on gold, folks, is 1,045. Now, they're going to go after that swing point tomorrow. Friday in the gold market is always a tough one. I expect tomorrow the volatility, man, is going to be huge. Silver, down 55 cents, $13.69. Platinum, off 30 bucks, $8.43 an ounce. Copper down 3 pennies at $2.04 a pound. Light sweet crude, now check it out. Light sweet crude down 71 cents. We're at $34.81. Light sweet crude, folks, is going after the swing low of 2009 on a continuous contract. That's $32.40. The way it's set up right now, it actually looks like it's going to go a lot lower than $32.40. They slammed this baby today, and looks like it's going a lot lower. Bonds continue to not only give the most consistent information out, they just will not give it up. So fundamentally, you have the Fed go up on rates. They say they're going to go up higher the rest of the year. And the bond market this morning was up. Yesterday, it didn't get trashed. And that was the first signal that everything in paradise wasn't exactly just beautiful. Bonds end up finishing up 14 ticks the 10-year at 126.06. 30-year was up a full point and 12 ticks, 155.29. They both won higher price. And inside the bond market, folks, what happens is it's supply and demand, just like all our markets. That being said, the bond market is showing that, guess what? People want to get their money back. That's all this comes down to. King dollar. Now, here's the deviance also. King dollar up 1,300 ticks at 99.21. Now, King dollar had the price spread, no doubt. Good price spread. No volume behind the move. I do expect you're going to see King dollar a little bit higher tomorrow, and then I expect you're going to see it give it up. Euro down 96, trading at 108, and the yen trading at 122.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so what we have here is this. We got to a higher high today. You got to 208.48, and you gave it up on price. What does that set up? Bottom line, it sets up, you're going to make a run for the lower end of this, where we're trading in right now, which is 199.95. The S&P, and this is where the deviance also comes in. Now watch as I bring this back a year. We have continued. The high in the S&P, we've been at these highs all year long, folks, but the actual high was generated May 20th. That was 213. When you take a look at the S&P from May, we've continued to have lower tops and lower bottoms. Bottom line, that's a downtrend. Now, there's no doubt that, you can make the argument that, hey, we've been at these highs, and we have, but each and every time, particularly since the August downdraft, the selling intensifies on the way down. Now, what we'll have here tomorrow is this. Tomorrow you get option expiration. It's triple witching, which throws huge amounts of volume in the marketplace. If we're down tomorrow, which I do expect we will be, and you get the volume heavier, there's another confirmation that that's where we're going, is downtown. NDX 100, the 3 Qs. 3 Qs, higher high, lighter volume, gave it up on price, all of the above. And inside the 3 Qs, you can blame someone taking a bite out of the good old Apple. Apple only moved $2 down, but bottom line, $2.36. You have volume on the move down. It's broken its weekly swing point now, and it has broken the weekly swing point. We have 1 day left in trading with volume. Thus far, we've done 218 million shares on Apple. The swing point had 189 million shares. The swing point was 111. So now where does it want to head to? Now it's going to head to the next swing low. Next swing low is at 107.31. So bottom line is that a little trouble in paradise here for Apple. The trouble in paradise in Apple gives Big problems to the NDX 100 and the S&P. It also gives problems to the Dow, but the S&P, NASDAQ, big problems. ASAP too, by the way. The bond market. Let's go to bonds. So bonds did 940,000 contracts, the 10-year, up 15 ticks. This is going after the highs, man. This is going to go after the last swing high up here, which was on December 11th. The 30-year bond is right next to its highs, period. Its highs, period. The 30-year, folks, is traded 155.31. The close of the high was 157.10. So you're talking 32, 42, 50. You're talking 51 ticks away from an all-time high inside the 30-year. You know, and you have juice behind this move out here today. King dollar. What do we got with King dollar? Bottom line, King dollar had the price move out here. No doubt about that. What it didn't have is that didn't have the volume behind the move. We did 30,000 contracts. You're going into 125,000. That being said, it's like, okay, King dollar can go up and we're at 99.19, 99.89 is probably game. You know, we'll see if it can handle that. My take is that King dollar wants to run down to this $94 level. That's how this seems to be shaking out. Oil market, CLG. What we have with oil closed at lows, has volume behind the move. Oil's in trouble, big trouble too. 36.10. We're at 36.01. So you have a closing low inside the market out here. Now, the continuous contract has that high volume swing low at $32.40. But that's almost like too easy saying, oh, that's where it wants to go. It looks to me like it's going to go a lot lower than that. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow finished down 253. NASDAQ off 68. S&P's down 40 bucks. Amazing. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 253, Nasdaq off 68, S&P's down 39, and they took these S&Ps. You know, if you had listened in the last hour, folks, it's really unusual when they take the S&Ps not only south, and this is whether if in this case we're going down, but it's very unusual from 4 to 4:15 that you see a huge amount of movement inside the S&Ps. Well, we got it today. Bottom line is that they took this down from 2030 to 2024, and you get juice behind this move. You know, what does it mean for tomorrow? Well, I expect you're going to get more selling pressure, but they took it down fast, furious, all of the above. Inside the NQs, they did the exact same type of move coming into that close. The S&Ps and the Nasdaq are actually below where we were at the start of yesterday. We're back, yesterday, and this is really bizarre too because, you know, we're always looking at these high volume swing points, and on the NQs and on the S&Ps, at 2 o'clock yesterday, you had a high volume low. You spike lower first, you spiked higher. Well, guess what? The lower one, it not only went into it, it just blew it away. The lower one on the NDX is 45.75, and we're at 45.68 right now. Inside the E-minis, you take a look at that inside the E-minis, and what you have inside the E-minis is this, is that the E-minis, that high volume spike on the low yesterday was 20.43, and we're actually 20 points below that. So inside the Dow out here, the strength versus the weakness, there was only one stock that was positive inside the Dow today. That was United Health. That was up 39 cents. The culprit, biggest lag, it was Caterpillar. And if you know, our man, Mr. John Logan, kicks us off every morning at 8 o'clock in the morning. Bottom line, he was talking about Caterpillar today. In fact, on this show here yesterday, we were talking about Caterpillar. Caterpillar was just coming up into a profile. The profile we were talking about as it's coming up into was the $68 area. That profile, the profile we were talking about was resistance. And what John had been bringing up is that this was a dog that had fleas in a market that was going higher. So let's go back to the Dow for a second. So that was the laggard. Then you had Chevron. It was down $2.90. Merck was off 136, and Walmart was down 132. If we do go into the oil sector for a second, the volatility is out there. There's no doubt. And this thing's not done going down yet. You know, I suspect the way that the ExxonMobil and Chevron is trading, folks, is that these look to me like they will be good buys. You know, they had huge expansions on the way up, just as huge coming back. You know, if we look at Exxon on the 24th of August was trading at 66. On the 3rd of November, it was at 87. We're at 77 now, and I do expect, you know, this thing will come all the way back to 72. You know, but at 72, you're going to want to be looking all over it, because the Chevron and Exxon, they're operating pretty cool with oil hitting lows and looking like it wants to go a lot lower. The XAU, the HUI, this is what you have happening in the XAU and the HUI. XAU is back $3.48 today. We're at 43.21. The swing low is 42.72. I don't get volume in these babies until about 8 o'clock in the evening. The HUI, that was down $8 today. You're at 106. That swing low is 101.27. What I do expect we're going to see out here tomorrow, the volatility will continue. Fridays in the gold market, particularly on a down week, are always tough. I do expect that gold contract is probably going to make a run for the lows. We'll see whether it rejects the lows or not. I do expect we're going to, but you know what? We'll make that run, and we'll see how it handles it. The reason I'm saying that I expect it to reject it is that when you take a look at gold intraday out here today, what you have is that your first sell down that had all the volume, it is a lot higher than we are. The last time they had volume on the way down, even though we went to 1046, was at 1052. And then you're bouncing along this bottom, and it doesn't look like there's any more sellers at that particular point. Because you got to remember something inside the futures market, when you get an expansion down, like we did today, you got an expansion down from 72 to 50. That's $2,200 per contract. And you're only putting up 41. So most times, who's ever in or was in on a long position, they're out. So the key is, are there more sells below the level we are now? That's what has things get into lower lows. Can people sell short at this and get lower lows? Yeah, but most of the time it's people that are long, particularly when you're down at these lower levels. So we'll see where that whole thing does shake out. What I do expect let's take a look at some of the higher volume stocks in this market out here. And as I said a little bit earlier, what we did get is that we got to a higher high, we had lighter volume, we gave it up on price. The poster child out here today was TK Corp. That stock absolutely got killed. There's a corporation that got killed, TK, and there's a partnership that got killed. That happens to be in the oil business also. That was down $10.22. This is an international crude oil transportation company. They get oil tankers worldwide. Just got killed, man. I mean, it's just pretty amazing, actually. The equity in the last 6 months is from $45 to $7. This looks to me, we put this up, hopefully that no one is in this thing, because this looks to me like it probably is going down. Well, it's broken everything. It's broken, and the next stop is zero. That's how that looks at this particular point. It's been in consolidation for 2 or 3 years. Blew out that consolidation, blew it out with volume in a big way. Let's go over to Walmart, because you know what is really wild too is that it's like, Walmart can't even hold price. And it's like, okay, where is all the money going that we're saving inside the oil business right now? We're all saving a fortune, right? And fundamentally, that would make sense. Like, okay, what are we doing with our money? I guess we must be keeping it. Either that or we're all spending it on Amazon with electronics. Because the retail stores are not getting the money. There's no doubt about that. Well, yeah, one of the that's a good point. One of Danny Atlanta saying paying debt. Yeah, that's cool. If that's what people are doing, that's even better. I am not getting in debt. The credit card debt, folks, and debt has gone up in general, and gone up pretty good in the last couple of years. But I do expect that people will not get in the type of position that they got in 2007 as that lead up there. I hope they don't. Anyway, you do not want to use your house, folks, as a piggy bank. That absolutely makes zero sense. If any of us have learned anything to see how fast housing prices can go down, do yourself a favor. Make sure you have a roof over your head. And I know the banks, there's no doubt, the mortgage brokers, they want you to take out, more mortgages. I mean, I bet I get, just like everyone else, 5 to 7 of them every single day. It's like I come home, it's like, you gotta be kidding me, man. It's just crazy. You stay right there, folks. We're gonna be coming right back. The Dow Industrials finished down 253. Get the Nasdaq off 68. S&P's down 40. We're going to have our man, Mr. Chris Gaffney from Everbank World Markets coming up next.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 253, NASDAQ off 68. S&P's off 37. Highly volatile day, no doubt. Currencies, we had the dollar up 1,300 ticks, the euro down 94. And we have our man, Mr. Chris Gaffney, the president of Everbank World Markets. A great day to have him on, no doubt. And folks, as you come over to our website at TFNN, on the right-hand side, you're going to see the Everbank banner. You hit that banner, and you're gonna, what's gonna populate there is that we put the money in money market. We're gonna be talking about the special yield pledge money market offer that Everbank has right now. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. Another interesting day in the markets.
Oh my God, I'm telling you. You know, what's pretty cool here is this. We always seem to have you on the great time, you know, and last time, of course, we knew the Fed was coming out yesterday, so I wanted to have you on the next day. And, you know, when we talk money markets, right, what I've seen many times is this, is that the S&P has been flat all year on. So some people just want to make sure they get their money back, right? I mean, you don't have to be in the market.
Yeah, in this type of environment, preservation of capital is much more important than return on capital, actually.
Absolutely, man. So
yeah, FDIC-insured money market accounts are a great place to sit and park cash and you know, kind of ride through this volatility. And our accounts are paying, you know, among the top. You know, we have a pledge to keep them in the top 5%.
Yes. Now, can you explain how what happens here, folks, is this, is that they're always in the top 5%. You've probably seen their ads many times, okay? They got beautiful full-page ads, and they're explaining that's top 5% competitively right across the country. Now, in this particular case, if you fund this before December 31st, and the reason that we'd like you to fund it right now, because everyone's going to be busy in the next couple weeks, folks, okay? The bottom line, if you fund it, can you explain how the bonus works, Chris?
Sure. First of all, we're going to give a bonus rate on that first 6 months. So you'll be paid right now a bonus rate of 1.6% on the first $150,000 that you put in the account for the first 6 months. So that brings the first year annual percentage yield, or APY, up to 1.11%. So over 1%, which is unusual for a liquid money market FDIC insured account. But in addition to that, right now we're running a special for the TFNN listeners, and we will put an additional $25 up to $500, depending on the size of that deposit into the account. So it's free money. If you put between $10,000 and $24,999, we're going to put an additional $25 in your account after you keep that in there. And I think you have to maintain the balance for I think 3 months in order to get that bonus. But again, it's a really free money.
You know, the thing that what I'd like to go over, folks, is this. This is what you really want to wrap your head around. Now, Chris just brought it up. This is a liquid account, okay? So what happens is this. You can move your money. So we're not talking a CD, folks. You're talking a money market. So there's a huge difference. You can move your money in this account 6 times a month, okay? I don't think, you know, most people, I mean, you don't move that money that much. Do you know what I'm saying? So this is really cool that you can get an interest rate that's over 1%, and like if something happens, well, great, you can get your money without a penalty.
Yeah, it's a liquid account and FDIC insured, and again, a stable place to park funds in what we're seeing could be an unstable environment. I mean, the Fed. You know, this is the first step. They made the move, and now the question is, what happens from here? Is the U.S. economy able to withstand higher interest rates, and do they have to come back? And you know, is that, even though it was just a quarter of a point, do market expectations all of a sudden send interest rates higher? And which we're up a little bit today, and does that kind of stall this tepid recovery that we've had? And so it's you know, there's still a lot of questions. The you know, the Fed removed one in when liftoff was going to occur. It removed that question, but there's still a whole lot of questions about when the next move occurs and what happens next, really.
You know what's amazing is that many times I'm sure all of us have said, well, you know, this time is different, and you know, in markets in general, and most of the time, folks, markets are always the same. They're always a little bit different. But truly, this is the first time, I guess, in our generation that have been alive that this has ever happened, right? That you get 9 years of no rate increase, and you know, then it's like, okay, we're going to have a liftoff. And I guess, Chris, what I look at, and it's absolutely, you know, I understand that, you know, they got to lift off at some point. But when I look at the rates around the world, I'm saying to myself, man, this is intense. Like our 10 years at 2.2 right now. And, you know, you get Germany still at 0.5%, and France is at 0.9. It's like, wow, I have a disconnect in my own head. Like,
well, and that is the big risk that we face is you know, we're on it alone. We're a lone wolf out here. We're, you know, Bank of England may follow us. We'll see. They may end up following us on a rate increase, but they're the only ones even considering it right now. So, yeah, we're out here on our own. That's why you've seen the reaction in the dollar. The dollar's higher today. We've seen. You know, that is pushing higher, and we expect it to go even higher as that central bank divergence becomes wider and wider. It just makes the U.S. dollar more attractive because of our higher interest rates. Now, who knows what that means for the equity markets? I mean, my goodness, we were up yesterday, and now we're down a little over 1% today.
Oh, it was a very fast give back. There's no doubt, man. I mean, I knew you were coming on this afternoon. We're down 1.5% across all the markets. And, when you look at this money market account, and, I talk about this a lot. I always talk about, okay, when I'm doing an investment, how much can I lose? Because, you're going to make money through your lifetime, folks. It depends on how much you lose making it. Bottom line, sometimes no trade is where it's at, making sure you have your cash. Now, if you're in a position like that, this is a great vehicle for it. You have until December 31st to fund it. The number to call is 855-750-4051. That's 855-750-4051. You can also just come right over to our website at TFNN, hit the banner. You can go over there, open the account. The bottom line is that, you're going to get some good interest. You're at an FDIC account, and it's liquid. It doesn't get any better, man. Seriously.
And right now we're running that bonus, so again, we're gonna give you a little Christmas present with your deposit. So
that's a beautiful thing.
And that goes away on December 31st.
Santa Claus Chris, I like that, man. Totally. Well, listen, man, you have a great one. Have a safe one, and of course, we look forward to speaking to you again, Chris.
You bet.
Okay, thanks. You stay right there, folks. We're coming right back. Now, the phone number, 855-750-4051. And just to go over it again, folks, okay? It's a totally liquid account that's paying 1.1%. Check it out, front page of TFNN. You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow finished down 253, NASDAQ off 68, S&P's down 41. You're coming into triple witching out here tomorrow. So you can expect this volatility is going to continue, folks. It's pretty intense. There's no doubt about that. Now, you know, some of the poster childs out here today as to equities that just got absolutely toasted, because each day it seems like we have one equity, and they're talking about very large equities that are down, well, 15 or 20%. Out here today, it gets a lot more intense than that. You have Polaris Industries, that's PII. That is down. If we take a look at the Polaris, let's put this up here. PII. So Polaris, okay, you know, this is the snowmobiles, the motor, I believe they have jet skis also. Let's see, off-road, on-road vehicles, snowmobiles, all-terrain vehicles, or motorcycles. I guess they don't have snow, but well, I guess I could see that in the context that there's probably no snow around this year. Bottom line is that was down $10 out here today, or 10%. This has been a one-way trip down for them. They've gone from $154. Let's take a look at this. This is pretty intense, actually. Yeah, you're talking about in 1 year, $154 down to 85. And the way this looks like it's going, oh man, look at this, what a trip. So the high volume, last time it had any volume on the way up, folks, was, let me pull this back for you. I'll put this on a monthly so you can see this, man. When these things start going down, folks, what you want to do ASAP is put them on a chart and find out where the last time volume was on the way up. Because that's where they end up going to, which is just crazy, but that's what happens. $60.42, August of 2011. Now, August of 2011, depending on how long you've been listening to me on this radio, that is the next stop on the S&Ps. And this is another one that's going down there right now. You're $20 away from it. And, you know, this month we've gone down $35. That thing is sticking out like a sore thumb right there. So that's one of the poster childs out here. The largest poster child happens to be TK Corporation, TKI, I believe that is. Let me pull this up. Let's see. TK, maybe it's just TK. Yeah, so they provide international crude oil, petroleum product transportation services. They service major oil companies. Let's pull this, TK. And so this is oil tankers worldwide. What happened with this company, evidently this came out of nowhere. It wouldn't make sense that it came out of nowhere, but they cut their dividend. These are, you know, these are dividend stocks. They cut their dividend from 55 cents to 5 cents. Now, at 55 cents, if you're in a stock, folks, that is paying a dividend that is, you know, more than 7 or 8%, you know, watch out. If they're paying 20%, get out of the stock, because they're going to cut that dividend. Stocks don't pay 20% dividends. Just doesn't happen. This stock here, as of yesterday, it was saying it pays a 30% dividend. Well, guess what? You know, they just cut that dividend by 90%. So now it's paying a 3% dividend. Is there hope for the stock? Well, when you actually look at this stock is broken down every level that it's ever traded at. The highs in the stock, 2007, you had a $63 high. And the 2008 crisis, we went down to $10. It goes all the way back up to $67 and then comes off the high with volume. Monster. What it did out here this month is broken everything to the downside with monster volume. That thing's going, hey, that thing can go to zero. That's how that thing shakes out. And now, let's go back to, is there another one here? There's a few of them. CWEI. Let's see what this one is. CWEI. This is going to be probably energy again. So this is Clayton Williams Energy. Let's pull this up. CWEI. So they explore and produce oil and natural gas. The low is $33. The high is $73. This was down 25%. And let's take a look and see what this one is. This one is going after its low. So in the last 2 months, it's down from $70 to $34. And that is going after its lows. So that's we're at 34, 24 is game on this baby. You get some big problems. Now, let's look at a larger stock that has already had some problems, and that's CMG, Chipotle. Let's pull this baby up. CMG, so this is trading right now. This was down $12 today. We're at $554. Don't touch this stock, folks. Do yourself a favor. This equity here, so let's, well, first I'm going to go through it technically for you, and then I'll go through it fundamentally. So technically, you've just come down from 750 to 550. We put this back, and what you're going to see is this. It is monster volume off the highs. You're talking about last month we came down with 26 million shares. This month we've done 24 million shares. The last time that this had any volume on the way down, folks, okay, is 404. So we're at 554. Let it get to 404, and then can figure out, okay, will it hold or is it coming into a volume? Because it actually looks like to me it can go to 322. Now that's the technical setup. The fundamental setup goes like this. The fundamental setup, you are still paying for this equity at this price, at $554, for every dollar of earning, you are paying $35. That's insane. Why is that insane? That's insane, folks, because what you have is that you have a company that has done great, but has a huge problem with their supply chain. Now, if you have a problem with the supply chain, it happens once or twice, that's no big deal. You have a huge problem with the supply chain that's been going on now over 3.5 months, that's a huge problem. You're talking about people's health, you're talking about getting sick or not getting sick. Is there plenty of people that love that place and will go back? Yes, there is. Does that do them any good as to making money and growth? No, it doesn't, okay? Because they need two different things. They need, number one, everyone that used to go to Chipotle, go back right now, and they need growth. And it's 35-1. It's not even close. What I've seen in the past with food scares, you absolutely can come back, but you're talking about 1.5, 2 years, 3 years. A lot of work to do. And that's, I'm not sure the last time, Procter & Gamble had one, Taco Bell had one. There's been Bayer. Bayer was a huge one. People were dying with Bayer Ash, remember, years ago. So I didn't know what the PEs were for those when that was happening. But a 35 PE is unbelievable in itself. Never mind a company that's having problems. You stay right there, folks. We'll come right back. Dow Industrials closed down 253. NASDAQ off 68. S&P's down $39. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So on the open tomorrow, folks, is that on option expiration, you have, of course, options that are expiring, futures that are expiring, and what the difference is on a quadrichon is that you have options on the futures expiring. And at the open, what you're going to see is that the S&P expires. That always throws high volatility into the marketplace. Listen, that can be both ways. That being said, as you're setting up for that market out here tomorrow morning, let's go to Asia first. So if you take a look at the Hang Seng last night, Hang Seng was up 170. No juice, though. Bottom line, this Hang Seng, I suspect, is going to back right down. And when I say, no juice, also, the Hang Seng is way off its highs. The Hang Seng high was in April. That was 28,000. We're at 21,000. You're 7,000 points off the high. If we go to the Nikkei, you take a look at the Nikkei, because if we take a look at this Nikkei, the Nikkei gave it up last night. The Nikkei was as high as 19,500 last night, ends up being 19,350. We take a look at where the Nikkei is, dramatically off its highs also. You're talking about 20,952, and we're at 19,003. Now, let's go over to the DAX. Now, we'll go to the FTSE first. Now, the FTSE today was up good. We're at 6,100. The FTSE is way off its highs. The high in the FTSE is 7,100, so you're 1,000 points off or 15% off your high. That being said, the FTSE was up 3%, folks, when our markets were opening, but our S&Ps are only up 4.5 points. That was an indication right there, like, whoa, what's wrong? If you get my daily newsletter, I put it right in there. I says, we got a real disconnect out here this morning. Bottom line, FTSE wants to go after this swing low of 5,700. Huge problem. The DAX in Germany, DAX was up approximately 3.2% this morning. And when I say this morning, I'm talking about approximately 8:30, 8:45 Eastern Standard Time. The DAX is at 10,700. The high in the DAX also brings you all the way back to April, which is 12,300. So, you're 1,700 points off there also. Bottom line, DAX looks like it's going to give it up tomorrow morning also. So now that brings us back to our markets. If we take a look at the SPY, when we came down last week, you came down with volume. That is hanging out there right now. And we're right next to it right now. The day was so dramatic, actually. We gave up more than we got yesterday. So I expect what we're going to actually see out here is that we'll actually probably see a gap down. This thing will try to jump. It won't jump the whole creek because the bottom of the creek is at 199. I can't picture that. What it will do, more than likely, you can see that S&P opening at 203. And that's down $1.86 from where we are. Now, if that's the case, that's going to be a big number, because if we go over to the $1.86 would end up being about 20 S&P points down. If that's what you get, what you're going to end up seeing is that it is going to power into that lower swing point inside the S&P. And how we hit that lower swing point is going to be a big number, meaning do you hit it with volume or not? Now, it being option expiration, more than likely you're going to see the volume expand. When we take a look at the S&Ps and you put these inside a channel, whether it's diagonal or vertical, bottom line, every one of these swing lows have volume compared to the highs. So guess what? That's where we're going, folks. Market's going where the volume's going. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here. And don't forget, at TFNN, 8 o'clock in the morning, live programming. TFNN.mobi, right in your cell phone. Go get them, folks.